The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good day from TFNN. Welcome to the May 11th. Fantastic Friday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the good in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past, well, 8 o'clock in the morning. That's right. If you're listening on the normal slot at 1 p.m., this show is being taped live at 8 a.m. So we're going to take a look at the futures contracts. And if you are listening, you know that this show is for you. I mean, I am absolutely grateful for your presence here, but I'm here for you. So feel free to give us a call, 877-927-6648. Of course, if it's 1 o'clock, don't be doing that because I can't answer your question. But if you are listening right now, you can always send me an email as well, steve@tfnn.com. Of course, inside the Tiger's Den, any ping will do. So let's go ahead and get this show started on fabulous, fantastic Mother's Day weekend Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to Less Show. Right now, the Dow futures trading up 37 points. They're printing out at 24,729. S&P futures are up about 4, 27,2275. NASDAQ futures up a little over 5 points, 69.70 is the print there. Russell 2000 futures up 3 points. You've got gold up 250, silver up a nickel. Light sweet crude is basically unchanged, back 6 pennies. Let's see what's going on over in Europe this morning. Take a quick peek. You've got the DAX that's off 38 points and the FTSE is flat. A quick peek in on the DAX out here. Well, Stevie's got the DAX. Here's the monthly chart for the DAX, and Stevie's got the DAX on its way up to the 14,129 level. Now, and this is great because this is actually going to be a good lead-in for a question that came in late last night. And the reason why I say it's going to be a great lead-in is because here we're taking a look at a consolidation pattern, a 5,950-point consolidation pattern inside of the DAX. It's a monthly time frame chart that you and I are looking at. We can see that the consolidation was broke with conviction back in 2013. It was a sideways move, by the way. When I say sideways, it was a consolidation. Can't really call it a sideways move, but it was a consolidation that began in 1995. The bottom of that consolidation was tested in 2003. Out here, the top of the consolidation, 2000. That 2000 high was tested in 2007, and then the final break of that consolidation in 2013. Always best to have the long-term picture at hand when trying to analyze what's really going on inside the markets out here. Well, when you break a consolidation, it provides us with a measured move. The measured move is the measurement of the consolidation. And therefore, price should get to the extended consolidation. You take that exact same price level and just add that box to where the consolidation broke. That gives you your measured move that is equal to a breakout, such as the one that this had, the DAX in 2013, it's equal to or greater than. Well, the equal to out here inside the DAX is 14,129. When the DAX gets over its high out here, the high is 13,596. This is January 2018. We're looking at the DAX priced in dollars out here. Something to think about. 14,129 is in the cards. In fact, really beautiful looking patterns out here. I'm going to guess that the 12,651 level that I've got was the close in 2017. At 12,651, you're trading above that as far as the DAX. That is always a good thing out here. So that is what's going on in the DAX. I wonder if I've got any charts out here. I've got a chart for the FTSE. I don't know if I have anything drawn in. Yeah, I've got a consolidation pattern as well drawn in on the FTSE. So the FTSE, just to give you an idea, and this has got a long way to go. It's consolidation. Really, what's really interesting, now this is really interesting. You're going to say, what do you mean it's really interesting? Look at this. Give me a moment to draw this pattern in. Let's use this a nice yellow rectangle out here. But that's pretty interesting. You're going to say, get to it, Steve-O. What's pretty interesting? If we take a look at the decline that we saw inside the markets, one world markets out here, all right? We take a look at the FTSE. Its high in January, just like the U.S. markets out here, brought price all the way back to test the top of that consolidation. I mean, almost to the T. And when you break a consolidation, when you break any pattern, you really like to see price come back and test it and then reject it to tell you, okay, I'm done trading in that consolidation area. And folks, this is exactly what the FTSE did in April. Was it April? It was in March. I take that back. In March, as it made its lows out here. So what the FTSE has just confirmed for you, maybe you want to consider putting a few dollares inside the FTSE over the long haul for your long-term portfolio, because its measured move, and you're only trading at 77.03 right now, its measured move is going to take you to the 10,398 level. If you and I were writing a book today, and we were going to write a book on consolidation patterns and what you would anticipate and expect and how you would like to see a consolidation pattern confirm itself, well, voila, it's right here. Does it mean that it's automatically going to work? No, but you know where your stop is. Your stop is going to be below the lows of 2018, the March low out there. This looks like a great reward to risk trade. That's a freebie. Brought to you by TFNN, all the good folks at TFNN.com. This is Steve Rhodes doing the 1 o'clock show, however, doing it at 8:14 in the morning. So thanks for listening. When we get back from this break, this first break out here, we're going to go to the question that Eddie posed to me, and that is with regard to, will Apple, when Apple gets to $1 trillion in market cap, is that going to set the high for the markets? And you and I will go answer that question. It's a great question. Let's go see what we can figure out. Steve Rhodes at TFNN. Oh, great. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Are you an options trader that's looking for that extra edge when placing trades? David White will be hosting a webinar on May 16th, which is the Wednesday leading up to options expiration Friday in May, where he'll discuss in depth the methodology he uses for trading options near expiration, including swing trading setups and expiration day trading scenarios. Subscribers to each of Dave's newsletters, Path of Least Resistance and the Technology Insider, gain access to this 60-minute webinar, which will be archived if you cannot attend live. Dave has had some great option trades recently for his subscribers. See for yourself the trading methodology he uses when trading options by signing up today for either of his newsletters, and we'll see you Wednesday, May 16th at 5 p.m. for option trading near expiration, analyzing swing trades and expiration day scenarios. For all the details and to sign up today, visit the front page of TFNN.com.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. This is of course, the Trader's Edge show. I'm taping it at 8 in the morning, so it's 8:18 a.m. If you're listening to the 1 o'clock show, I'm going to make this as pertinent to the 1 o'clock hour as it is to the 8 a.m. hour. Now, one of our listeners, Eddie, had written in a couple of weeks ago, just before Apple's earnings out there, and we were able to identify inside the chart of Apple. Let me actually bring a chart out here so I can show you, just simply so we can review. This is always good to review, and I'm going to put this to the daily time frame out here. And at the time that Eddie had written in, what we're going to notice is, first of all, Apple had formed a Gartley buy pattern. I'm going to show you. I'm drawing this in on the screen, so if you're watching us on TigerTV, you'll see, let me get my cursor out here, that the confirmation of this Gartley buy pattern took place on April the 30th. The reason why that was the completion of the pattern was because that is where we saw a bullish reversal candle. You need to know your P's and Q's, which means, I just like to say that, you need to know your bullish and bearish reversal candles. If you don't, then you are trading or investing with both hands tied behind your back. And that doesn't sound like a lot of fun to me. The real confirmation came on the following day, though, when price closed above Stevie's red line. So that was on May 1st. Apple's earnings took place a couple of days later, on May the 4th. So the market knew something with regard to how it was going to respond, or we like to believe it knew something. This was the tell. If you were a Texas Hold'em player and you were trying to look at people and look at their signals, their breathing habits, places they touch, things of that sort, you're looking for a tell to figure out what to do. Well, this was the tell with regard to the market because it had completed that Gartley buy pattern. Now, all Gartley buy patterns have 5 different potential outcomes. We are into outcome number 5 right now, which is that this turns into an A to B equals CD to the upside. What does that look like? Well, we're just simply going to start with our swing point low on February 9th. That's our A point. Our B point out here is that bearish engulfing candle on March the 13th. And the C point out here was the low on April 27th. Now, one of the things that you and I can see when we take a look at this Apple chart out here, and in essence, Eddie's question is this. He's done a calculation that says at 203.50, that is what would give Apple the $1 trillion market cap out there. So somewhere around there. Of course, with stock buybacks, things of that sort out there, we don't really know what the exact level is. But the question is, hey, could that be a near-term top out there, being in this unfavorable seasonal cycle out here? So that, in essence, is the question that is posed to us. First, can Apple get to 203.50, right? Well, if we take a look at this A to B equals CD pattern out here, the 1-to-1 would complete at 193.89. Now, here's one thing that you and I can take a look at. First of all, this has had conviction in its move off of that C point since April 27. And we can see that prices trading on the strong side. That's right. There's a weak side and there's a strong side to an A to B equals CD pattern. This is on the strong side. And that tells us, even though it did a 0.618 retracement, slightly more than that, but close enough for our workout here, that this is going to be more than a 1-to-1 A to B equals CD. So Eddie's 203 level, that looks like that is in play because Apple's not going to stop at the 1-to-1 A to B equals CD, 193.89. I know you say, how can you say that with such conviction? Right now, that's the information that's being presented to both you and I. I'll change my position when the market gives us reason to believe otherwise. But right now, I wouldn't be the one that would be sitting out at the 193.89 level to go ahead and sell Apple. I think that'd be crazy. Because where Apple's likely headed to when we take a look at the daily time frame chart is 202.93, maybe even 214.45. Now, clearly, Apple has a large weighting inside the NDX 100, good weighting inside the Dow, good weighting inside the S&P, but Apple alone is not going to be the thing that turns the market to the upside or downside. With exception being truly the XLK and the NDX out here. But as we switch this back into a monthly time frame out here, what we're going to see, and we don't know, we're just early into the month, but this is one heck of a wide-ranging bar. In fact, the largest that we have seen in Apple in years, if not its lifetime. Yeah, looks to me, as I take this back even into 2009, we have the widest ranging bar that is in place. Now, granted, it is only May 11th. I do not know how the end of May is going to play out here. But really, there's no three drive to a top pattern. I mean, it looks like it. You might say, what is that? Well, a three drive to a top pattern. We'd come all the way back here into, looks like September of 2012. And then drive 2 looks like that's right around April in 2015. And somebody might say, well, geez, drive 3 might be this month out here. That's what the pattern looks like. Not a chance. No way, Jose. Nada. Zilch. Zippo. At least with regard to, as we speak right now, at 8:23 in the morning on May the 11th. Patterns do not end on wide-ranging bars. And right now, we've got a wide-ranging bar. So Apple, I come back to the daily time frame chart out there. It's headed to higher price. The question is, though, or was, will the NDX 100, or, you know, is Apple going to set up the top out there? Well, let's go back and take a look at the larger term time frame, just like you and I did for the DAX and you and I did for the FTSE. Free trade there on the FTSE. And here's the pattern that is inside the NDX 100. You knew I would eventually get to it. Some of you were saying, come on already. And that is the consolidation pattern inside of the NASDAQ, Eddie. Consolidation patterns work the same way. And we can see inside the NDX 100, that's the left-hand panel of our screen, there was a consolidation pattern, in essence, that was going on that began back in 1996. The consolidation pattern was broken with conviction in 2017. Just like the DAX, and now just like the FTSE, and as we have said all along inside the NDX 100, its consolidation measured move will take us into the 8,800 level. Now, I know you asked the question with regard to, is it maybe a short-term top? Short-term top, maybe. We are not there yet. You and I will wait for those patterns, just like we had a Gartley buy pattern in Apple. We'll wait for a butterfly sell or a Gartley sell or whatever it might be out there. Maybe it's one of Stevie's favorite topping patterns. But I'm not going to project what may or may not happen. Instead, let's just wait until it happens. But what we know has happened thus far, and if you were thinking of a major top out here, that doesn't happen until the NDX 100 completes at least its measured move in the 8,800 level. I'd also say watch the semiconductors. They're really right at the precipice that they have been trying to break through for several months out here. And that precipice is 1362.10. Yesterday's close, 1360.72. If in the month of May, yeah, sell in May, wham, 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 wham. If in the month of May, the semiconductor index closes above 1362.10, it will have confirmed its consolidation breakout. And that consolidation breakout takes you to 25.42.17. Do you have to jump in on the stocks as we speak right now? Absolutely, positively not. Now, back to Eddie's sell in May. If it's going to happen, Eddie, if it's going to happen, it's going to be when the S&P 500 forms a Gartley sell pattern. And I don't know if it will or it won't. Right now, the S&P, it looks like it's headed to the 2760 area. And I'd have to say more likely a larger than 1-to-1 A to B equals CD to the upside. 2802, maybe even all the way back to its highs. Steve Rhodes with TFNN. We'll be back in just a moment.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. TigerTV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So really just to finish off the NASDAQ 100, the NDX out here, Eddie, and then we've got another question that came in with regard to the NQ. So we're going to stay in the same subject area, but we're going to switch to different time frames. Let me just switch over to this chart here. It's a monthly chart for the NDX 100. And perhaps most important or underrated pattern that one wants to be paying attention to is trying to answer the question of, well, I'm not posing it as a question right now, but follow the money. Where is the money flowing? That is the question. When I say money, I'm not just talking about U.S. dollars, because if you're sitting over in Europe right now and you believe that the tech sector or the NASDAQ is the place to put your money, well, you're already back in and you're buying this because of the breakout. The breakout inside of euros at 56.7201. You're at 58.34 as we speak right now. That happens to be panel number 2. It says NDX in euro, so it's pretty easy to identify which one it is out here. Now, you can see that in euros, the NDX 100 is at an all-time high. We're not in that case in the case of dollars. We can also see that in Great British Pounds at the very right-hand panel of our screen, well, we haven't achieved the all-time high just yet, but we're very close to it. Right now we're trading out at 51.34. What we do know is the resistance zone at 49.83 has been busted through. Eddie, if the market's going to make any kind of major high, it's going to do it in all currencies at the same time. We're not there yet. What's going on in terms of euros and Great British Pounds, so if you're in London, you're anywhere over in Europe right now, you are buying the you know what I mean out there, out of the NDX 100, if you are a breakout trader. It's just kind of like the consolidation patterns out here. And it looks like the folks over in Japan are getting ready to do the same thing. Once price gets above 7.6 million yen out there, then for the NDX 100, it sounds like a lot, then it is in breakout mode. So the NDX 100, very likely, even though on a daily and a weekly chart has some bearish patterns out here, looks to me like it's headed towards its high. However, there's a question that was posed, which is as follows. Says Steve-O, I just kind of paraphrased there. Since April 2nd, 63.10 low, the ABCD target in time and price out here. May 10th, where's May 10th? We're at May 10th. Basically, here's the question. So here's the low that's being referred to in April. It actually looks like came in at 9 o'clock in the morning on May the 4th out here. Now, as that was happening, it had one of Stevie's favorite patterns out there. Price moving lower, doing less relative energy. It's the old blink game. It's the old liar's poker, and it was a liar that price wanted to move higher. And instead, price since then has formed another bottom. It did that during the low out here. This was in April 25th. And that, in essence, sets up one of the A to B equals CD patterns. Let's go take a look at it because there are more than one A to B equals CD patterns. I didn't grab it exactly, but it's close enough for our work. And we can see that's very close to the one-to-one A to B equals CD. And I think that is what's being referred to. And the question is, now this is on a 5-hour chart. It's on a 5-hour time frame chart. And you might say to yourself, well, why didn't you just do this on a daily time frame? Why are you looking at a 5-hour chart? And the reason is I will take you back to the top in January. Well, here's the top. Yeah. So actually, I'm going to take you back. Yeah, I'm going to take you back to, when am I taking you back? To January 29th, when the NASDAQ made a high, and it had the exact same pattern down here on April the 4th. The exact same pattern. So here's at the high. You'll see those black diagonal lines. When the NASDAQ made a bottom out here at about 2 o'clock in the afternoon on February 9th, it made the exact same pattern, only at bottoms. When it made its next all-time high out here at 2 o'clock in the afternoon on March 13th, it made that same pattern, just as it did here for that A to B equals CD pattern out here. Now, at the B point of this A to B equals CD, it did not make that pattern. What pattern did it make? Well, what it did was it made a 7th wave move up here at about 5:15 in the afternoon, and that was on, looks like, April the 20th. So that's another pattern that we trade out here. So where are we in the market today? We just showed you the A to B equals CD. We're in wave number 6, and so therefore there's potential. There's potential that there is a Gartley sell pattern that is forming. Let me go ahead and I'll put that tool on the screen out here just again so that you can, it's always nice to have it colored in. So there we go. And that's really what this trader investor is looking at, is the potential. Why isn't that working? That's weird. Because it's live TV. Oh, I'll be son of a gun. I can't draw it in. I'd like to draw it in, but I can't draw it in. Oh, that's too bad. Okay, well, look, in a Gartley pattern, in essence, you've got an A to B equals CD. We showed that. So, yes, there is potential. But if we're going to see that top form that you are looking for, we're not going to see it on the daily chart. We're going to see it right here in the 5-hour time frame chart. And if you ask me, is it getting ready to form? I don't know. I know what to look for. There's no reason for us to even have to second guess this. We already know what time frame inside the NQ produces the best tops and bottoming patterns out there. And if you'd like to understand these patterns specifically, I did a workshop. All you have to do is subscribe to my newsletter service. It'll automatically get posted onto your members page, along with a couple of other workshops and one that I'm creating right now for members to be given in a couple of weeks out there. I haven't announced the name of it and the date because I've been working on some additional programming I'm trying to get done before that workshop. So I'll have a pretty decent feel over the weekend. But either way, I give good workshop. It's as simple as that, folks. And so if you are looking to add to your technical tools, then don't hesitate. The cost of not learning these patterns is huge out here. So I don't know the question. What I do know is what it is we need to look for. And is that potential there? The potential is there. And we will see the pattern unfold. So back to Eddie's question, maybe there's going to be a short-term top, a little pause in price, because we looked at weekly and monthly timeframes out there before Apple makes it to that $1 trillion cap. And this will be the timeframe chart to be paying attention to for the pattern that would be in play out here. And right now, we've got two patterns. You're in wave number 6. I say wave number 7 happens here in the NASDAQ. It's a 5-hour chart. This candle session finishes at 9 o'clock, so it's not going to be wave number 7 at 9. It's probably not today. Maybe it's Sunday night, early Monday morning. Maybe it's Monday afternoon. I don't know. I just know what to look for. So therefore, one of the keys to decipher is the price oscillator going down. That would be true. That would be true, Dudette. And as long as price is trading above Stevie's red line, which right now is at 69.51, we know the price oscillator continues to rise above zero. So any kind of a pullback, folks, even if price pulls back to 69.51, 14 points to the downside this morning, don't think that it's over. It's not over until the Stevie's chart sings out there. Hopefully, that answers your question. It's Steve Rhodes with TFNN. Right now in the futures markets, we've got the Dow futures up 31, S&P is up 4, NASDAQ is completely flat. The price of gold is trading at $13.25 in U.S. dollars. Is that important? Something to think about. Steve Rhodes with TFNN. We'll go answer that question when we get back from this break.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The Taz Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the Taz Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the Taz Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So if you're tuned in to the 1 p.m. show, this is actually being recorded live at 8:42 in the morning, but still pertinent. I think there are entire discussion out here with regard to what the markets are doing, what to be looking for. We've covered longer term. We've covered shorter term. In the last segment, we went to a 5-hour time frame chart. As we were going into the break, I posed the question, what's it mean, gold trading up a couple bucks at $13.25? That's in U.S. dollars. Now, if you're watching this here on Tiger TV, you're going to see a chart of gold priced in 4 currencies, U.S. dollars. So if you're going to go buy an ounce of gold right now in U.S. dollars, you're going to pay $13.25. But if you're going to buy it in euros, you're going to pay 1,110 euros. Of course, you're going to add the premium to it. And if you're going to buy it in yen, it's going to cost you 144,000 yen. And if you're going to buy it in pounds, it's going to cost you $977 per ounce. So what does all that mean? Is that just kind of, hey, well, that's kind of interesting, Steve, but I'm not buying gold in euros. Well, maybe you're not buying gold in euros, and maybe you're not buying gold in yen, and maybe you're not buying gold in pounds. But if you are long gold, you're long the miners, what you want to see is gold rising in all currencies. To think that it's only about the U.S. dollar is pretty small-minded out there. Because if we take a look at the charts and we take a look at when gold makes its largest moves, it moves up in all currencies. If you take a look at what my crosshair is, those are the small little dashed lines inside of gold out here. When gold in U.S. dollars was making a low in December of 2017, this is a daily time frame chart, you will see that gold in all currencies moved higher. In all currencies, gold was moving higher. That's what gold needs in order to get traction. That's what the miners need in order for them to get traction too. So now back to where we are trading at 8:44 in the morning with regard to gold in all those currencies. You're breaking above a prior swing point in gold in euros, 1109.40. For those of you that are longtime listeners know that Stevie's been looking at 1107.10. What's the difference? In this case here, I'm looking at the actual swing point high. On the other chart, I'm looking at the actual closing price that showed the consolidation level. So closing over 1109.40 says that gold priced in euros has broken out above a prior swing point, ought to head to where? The next swing point. That's 1130.30. That should then go ahead and take gold up to 1362. If we take a look at gold priced in yen, right now it has broken through a descending trend line out here. So it too is breaking out. Now it's got to clear its most recent swing point high. That's in about the 146,000 level. But we can also see that gold priced in pounds has broken through a trend line. So this is really positive news. I don't know what it looks like at 1 o'clock or 1:38 or 1:45 because it's 8:45 right now. And I don't know what it looks like at the end of the day. But if at the end of the day we see that gold priced in dollars, euros, pounds, and yen continues its breakout pattern, this bodes well for that shiny metal. We got another question that came in. Of course, that wasn't a question. That was one that I had posed. But the question was, if time permits, so we're going to make it permit, is to take a look at the 30-year Treasury. And the question is, does the 30-year Treasury rally to the 145 or 146 level out here? And if we take a look at that possibility, there I suppose we're looking at a potential A to B equals CD pattern. So let's go draw that in. Let's go see if we can do that. That would look like this, starting with the low out here where I don't have the day. I'll come back and get the day when I get my crosshairs. Whoops. Let's go ahead and anchor that. And you can see that there's a potential for an A to B equals CD. That would get you the 145 level. 146, that could be pushing it out here. But certainly there's a Gartley sell pattern, potential Gartley sell pattern, that would form. Remember, it doesn't form or complete or confirm until you get some type of bullish reversal signal. But there's your first Gartley sell pattern, in that 145 and a few ticks out there, maybe 3, 4, 5 ticks out here. So that's a possibility. But if the 30-year Treasury is going to get up there, it's got to contend with a few things. One of the things it's got to contend with is the fact that it needs to stay above Stevie's red line. It just needs to, which it is right now, and it got above on yesterday, closed above yesterday. But we can also see that the top of its TAS profile thus far has held as resistance. So that's an area that it needs to actually get above. And then if we take a look at this green dashed line, right, we take a look, this is one of the Tommy DeMark trend lines out here. And that is a level that actually held as resistance. So there's your B point. So only if the swing point high from May 4th gets taken out, is there any possibility that you're going to see the 145 to 146-ish type range out here inside of the 30-year Treasury? Right now, I'd have to say it's just in a tight range out here. And the range, we'll say between Stevie's red line and that Tommy DeMark level, or the May 4th high out here. And not until we see that get busted can we really say that T-bonds are headed higher. I can't make that call. It's got to get above some resistance areas in order for that to unfold. Now, I see somebody, Maria, says that Bitcoin had a bad evening. I think I might have a Bitcoin chart, albeit a little bit of a delay. I think it's a little bit of a delay. Let me see where did I put that chart? I'll check real quickly to see if I can find it. It's probably not on this page. Let me one more. Maybe I don't have that workspace open. I hope that I do. So let's see if it's on this page. And yeah, well, here I've got the Maria. Is it the May contract? If I take a look at the futures contract out here, well, let's go take a look at it anyways. And so we can see now this is a 30-minute time frame chart out here. And so let's just simply do the wave counts out here inside of Bitcoin on a, well, let's grabbing that. Let me grab the right thing. Just going to do the wave counts to the downside out here. And it is in wave number 6 out here. So that would say, hey, you've got a little bit more of a move to the downside. Let's put this on a little bit longer term chart. Let me see what the daily time frame charts. Now, I think, as I say, there's a delay. This is the futures contract we're looking at. So what's the futures contract doing? Interesting, Maria. The price oscillator is above 0, and price is pulling back. I don't know. Let's do this. I don't know if these TAS market profiles on the daily basis are the best ones to have. Let me try the 5-hour time frame for us. So let me just change this chart back to minutes. 5-hour time frame, the 5-hour energy drink chart brought to us by Saratoga Bob, an ex-dinner out here, and really good time frame. Why, I don't know, but works pretty cool for a number of different instruments. Let's see if it's got any patterns that are present inside of the Bitcoin futures contract. Oh, man, I screwed something up. I don't know. And there is an A to B equals CD pattern, right? So we can clearly see that. I don't know why these candles got so narrow. But nonetheless, here is the A to B equals CD pattern inside of the Bitcoin futures contract. And we can see that it's hit the 1-to-1 level, approximately 85.30. But it's got a wide-ranging bar coming in there. So what's that tell us? And it's on the strong side of the A to B equals CD. It says Bitcoin, the futures contract, has got lower to go. 82.89 is next up for its price projection area. Steve Rhodes with TFNN. If you're listening in at 1 o'clock, thanks so much for doing so. We're taping this live. It's now 8:50 in the morning. Great.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So in the last 2 minutes out here, let's just take a look at some stocks that are moving in the pre-market. Symantec is the one leading the charge to the downside. Closed at 29.18. It's trading at 20.60. So let's go take a look and see if we can figure out what is at the 20.60 level out here. 20.60, is that, did I read that right? 20.55. Yeah, so that's quite a move to the downside. Already 3 million shares to the downside. So we got to pull this back here. Try to figure out. Well, there's your island top inside of Symantec. Let me get some profiles. See if I can do that for us. So here we're going to take a look at daily and weekly. So this thing is really falling apart this morning because this is going to be below all kinds of support levels and swing points. The swing point out here is February the 9th. So this thing is setting up. Let me put this to a weekly time frame chart. Turn those profiles off. They're not going to help us out. So it appears that there's an A to B equals CD to the downside inside of Symantec. And let's give it some price projection. The way this thing is gapping down this morning would suggest to me, because it's below the swing point, that it's not the one-to-one A to B equals CD. Because the way you come off of that C point tells you a ton of information. In this case here, it looks to be an explosive move. So 1994 happens to be the one-to-one A to B equals CD to the downside. I say there's no way that that is the level that it's headed to. more likely 1742. And really what 1742 does is it gets back into the 2016 swing point area out there. So it looks to me like that is where Symantec, SYMC, is headed to. Talk about having a bad morning. The trade desk, TTD, that's having a good morning. Closed at 52.73. It's straight out at 68.30 right now. 68.30. What is that going to do? That's going to get over its swing point out here, its swing point high. So a new all-time high is what the trade desk is set to do, and that could be an A to B equals CD to the upside. And if we take a look at that price projection here, it's going to hit the 1-to-1 this morning. So it's off to the 71.50, probably 78.50 level. Folks, thanks so much for being here, whether it was 1 o'clock or 8 o'clock this morning. Stay tuned. Larry Pesavento's coming up if you're here at 9, and if you're here at 1. It's your favorite polar bear, David White. Have a fantastic Friday. A happy Mother's Day to all the mothers out there. And just have a great weekend. And we'll see you on Magnificent Monday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.